You see the perfect setup for me on your chart. Clean range break, the EMAs are aligning, everything looks just like Ellie teaches. But then you freeze up like a deer in headlights. Wait, let me check my 47-point trading checklist. Is the RSI oversold? Is the MACD curling? What Fibonacci level is this? What's the volume compared to yesterday? Did I confirm the trend on 3 different time frames? Is Mercury in retrograde for the 10th or the 14th time? By the time you finish going over your endless list of rules, the trade's gone and you just watched a 200% multi-bagger that could have paid for your 5-star bill in the tropics disappear. Here's the problem. You think more rules equals better tradings. You've got rules for entries, rules for exits, rules for what day of the week to trade, probably even rules for what color socks to wear while trading. I used to be the same exact way. I had this massive trading plan that looked more like a legal document than something that'll actually make me money. I was so obsessed with having a perfect setup that I never actually took any trades. Isn't the point of trading to, make trades? Are you tired of missing move after move after move while other traders are actually making money? Most trading rules are complete garbage, designed for you to make you feel busy instead of making you profitable. Today I'm going to show you why your rule obsession is keeping you broke and the only 3 trading rules you need to start making money. This is 3 trading rules you must follow if you want to be profitable. The problem new traders face. Rules are for losers. Everyone thinks trading, you don't have a boss, you don't have a 9 to 5, right? You can kind of be a rebel, some might say. But unfortunately, rules govern everything we do. We have to follow rules in order to make money. That is how the way works. Unless you want to live in a tent in the middle of the woods, then maybe you don't have to follow rules. Next, overtrading. If you're taking 10 to 20 trades a day, you're overtrading by definition. You might want to get that checked out. I can tell you there's not 10 to 20 trades each day, and anyone that is taking 10 to 20 trades each day, NGMI, not going to make it. Big losses, small wins. Can you please explain to me why traders DM me almost every single day? Yo, Ellie, I lost 50% on this trade, but I only made 10% of my winner. The math is not mathing there. Now, I went to summer school for algebra, okay? I'm not very smart, but I can tell you, losing 50% and making 10%, not gonna make it. Revenge trading. Just because you got stopped out doesn't mean you can load full size on the next play and try to make it all back. That never ends well. Trust me, I've done it. FOMO. You missed the big Tesla move today, so now you're all upset. Your whole day is ruined just because you missed that one single play. That will destroy your account. Lastly, okay, new traders trust their gut, aka they just follow some guy on social media, not a system. Anytime someone DMs me, a lot of the times I ask them, hey, what's your system? And they go, oh, I just take Twitter alerts. See, that is not good, okay? Or maybe you had a feeling that Tesla's going to go down today, okay? That is not trading, okay? Systematic approach to everything, okay? Trading is a serious business. I keep saying this. It's been a recurring theme. This is not a fun game where we hope to make money. Now, I love gambling, okay? I bet a bunch of money on the Pacers last night and I lost, okay? Because that's fun. I don't care if I win or lose. Trading is serious, okay? It is a serious business. We do not hope to make money, okay? Our goal is to make money. There's no hope in this business. This is a serious business, okay? If you want to hit trades like this, okay, so here's a trade I took on Friday. I made about $2,000. It's actually $2,800, and my flexing cost me $800. And all I did is buy right here, and I made $2,000, okay? Or you want to hit trades like this, another trade, 100%, $3,800 because I bought puts right here. Then you need rules, okay? Rules are not for losers. If you want to hit trades like this, rules are a must. It's non-negotiable. But before we get into the 3 rules you need to follow, make sure you like and subscribe and drop a comment down below of your trading rules. In this video, we're going to fix your overtrading problem. We're going to prevent you from getting chopped up. And lastly, but not least, we are going to stop you from selling too early. Okay? This is the gem, so make sure you stay till the end. What makes profitable traders, well, profitable? Okay, so me, okay, I've been trading for 6+ years. I have a system for entries and exit. Okay, my system tells you when to enter the stock and when to exit the stock. I don't just hold because I think it's going to go higher. Remember, I don't know how high a stock will go or low, or if it'll stop me out. I have no idea. All I can do is follow a system for entries and exit. I only enter when criteria is met, okay? I don't enter all willy-nilly because some guy on Twitter is in it, okay? I don't do that, okay? I only enter when specific criteria is met. That keeps me out of subpar trades. I have settings, okay, to prevent myself from damaging the portfolio. And what do I mean by settings, okay? I have certain rules that I follow, okay? The reason I call it settings is because in a system, you have settings to change, but since we're talking about rules, we can cross this out and we can just write rules. Okay, we'll keep it very much beginner trader friendly. Okay, I have a clear, defined edge. I also know my setup. Okay, I know my favorite setups inside and out. I actually, no joke, I have dreams about them. It's kind of scary. I told my therapist about it, and he said, I don't know what to do. I don't know what stocks are. I'm like, great. Okay, I guess I'm just going to go check myself into the loony bin. All right, excellent risk management. Okay, I do not just toss money around to flex on the internet. Okay, I take risk management extremely serious. I am in the risk business, meaning if I do not manage my risk, I lose my seat at the table, and therefore I will not be able to trade. All of these should go for you as well. Rule numero uno, okay? Stop at 3 or broke you'll be, aka the 3 trade rule, okay? These are in specific order, okay? So stop at 3 or broke you'll be. It almost sounds like a Shakespearean quote, okay? This is also called the 3 trade rule. So how does it work? If you place 2 red trades in a row, so it's just trade number 1, trade number 2, and trade number 3. Okay, if you place 2 red trades in a row, you are not allowed to trade. Okay, you are done for the day. You're clearly not reading the market right. You're really getting yourself into a dangerous situation. So you just want to make sure after 2 red trades, you cannot make a 3rd trade. You are done. You'll hear me oftentimes on stream go, right, take it behind the barn. Okay, because that means I'm not touching anymore. I'm not donating my money to Wall Street's yacht parties. Not doing it. If you make your first trade is red and your second trade is green, you're also done for the day. Okay, what does this do? This basically allows you to make your money back in one attempt to have a better entry. Okay, sometimes you get wicked out, etc. on a trade. This allows you to get back in. Now, if you practice good risk management and say you lose, let's say 15%, okay, in the first trade, but you make 30% on the next trade, congrats, you just had a green day and you just saved yourself from portfolio disaster. How does this work? Well, what if your first trade is green and your second trade is green? Then you can technically keep trading. Now, often setups do not give 3 different entries, okay, until later in the day. So this just prevents you from, giving any money back, but this also allows you to keep the momentum going if you're running red hot. Nothing good happens after 3 trades. I bet if you went back, okay, and tracked all of your trades, all of your big blowups, I can guarantee you that nothing good happens after 3 trades. And I'm laughing because back in my early days, like if I just followed this, I would have saved myself a ton of pain. So what happens after 3 trades? Okay, the tilt side effects. You ever see those pharmaceutical commercials? Imagine, close your eyes for a second, imagine the tilt side effects, okay? It may cause portfolio loss or hair loss or blah, 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 right? Tilt is deadly, okay? If you start going on tilt and you start over trading and revenge trading, your account will slowly go into the abyss and kaboom, just up in flames, honestly. Okay? You'll feel frustrated, right? You'll feel frustrated you got stopped out, okay? Which also ties into the tilt side effects. Your emotions will get high, okay? You'll start to feel it, at least for me. I start to feel my emotions, right? It's like you start to feel it in the back of your head. You're like, okay, I'm getting kind of annoyed here. Maybe it's time to walk away. Okay, because when those feelings come, I can tell you from personal experience that nothing good happens after 3 trades. And lastly, and the deadliest, is you think you need to make it back. Okay, you got stopped out, you took a loss, but you need to make that money back. You can't have another red day. Okay, say you only lost $100. Okay, you can easily make that back in 1 trade, right? Your mind will tell you that it's a trick. Okay, it's a trick. But that minus $100 quickly turns into minus $1,000 in 1 day, all because you lost your cool. You remember that system you had here? Okay, here's a system. You might as well take that and throw it right into the trash. So how does this help you? Okay, this will prevent you from these small losses transforming into blowups. Okay, I'd rather you take paper cuts than take massive dents in your portfolio. This is a fail-safe on revenge trading. Okay, this is literally you telling yourself, all right, well, I'm not going to be a dummy today, and I'm not going to go on full tilt and revenge trade all my money away. And lastly, most importantly, is when you're running, right? If you're hitting trade after trade after trade, you can capitalize on momentum. Okay, this is key in trading. A lot of people don't talk about it, is when the market's hot, a lot of the trades are running off momentum. Okay, but when the market's slower, you don't have momentum. So you really need that fail safe in order to prevent you from revenge trading and getting yourself into a hole. Rule 2, honestly my favorite, is do not diddle or do not diddy in the middle. Okay, and I put a picture of Puff Daddy here to illustrate my point. Okay, so what is the middle? The middle is where Diddy likes to hang out. Okay, Now, I'm going to make jokes here, but I promise you after this lesson, you're never going to forget this entire part, okay? Do not diddle in the middle, okay? Do not hang out with Diddy, okay? You see it in the news, it's not a good time. Now, all it is it's do not trade in between the pre-market highs and the pre-market lows. Why? Because in order for our system to trigger, we have to either break the pre-market highs or break the pre-market lows. We do not take trades in between. Why? We're going to get into that. Okay, so what exactly is the middle? It's also known as the chop zone. Okay, this is the chop zone. This is where traders get destroyed. Now, if you want to play the edges of the pre-market highs and the pre-market lows, by all means, like, you can have fun with your 5% gainers. Okay, I'm here for 105% gainers and all-day trenders. That's what I like to trade because I'm lazy. Okay, if you want to stress yourselves out over 5-10% gains all day, by all means, have fun. Okay, but most of you have jobs, so therefore you should probably just avoid the chop zone and look for those all-day trenders. I will repeat this over and over again. There are no trades in the zone. Okay, I don't care if it's not proper English. There's no trades. It's non-negotiable. Okay, you cannot place a trade if a stock is stuck between the pre-market highs and pre-market lows. I have seen people lose thousands of dollars. Okay, massive blow-ups. Probably, honestly, if I had to count, hundreds of thousands of dollars. People trading. Okay, I've seen people blow up. I've seen people get super frustrated. Do not trade in the zone. Okay, but why does this work? Okay, so every rule I had, there's always a why behind it. Okay, I didn't just come up with this to sound super smart and intelligent and convince you I know what I'm doing, right? That was a joke. Okay, but why does this work? Okay, because the pre-market has a lower volume than when the market actually opens. Okay, so it is a low volume area. If you cannot break the low volume area when there's real volume present, that is a red flag. Okay, so think about it. Between 4 a.m. and 9 a.m., most of you are sleeping, okay, while most of us degenerates are up trading, okay? So then you wake up, you get to your desk or your office, and you have your coffee at 9:30 opens, then you're ready to start trading. However, okay, if you cannot break the low volume area when all the other degenerates come to their desk at 9:30, that is a red flag. And that red flag doesn't necessarily mean the stock's going to do anything bad or good. It just means that there's just no trend for the day. There's no momentum. Traders have their money focused elsewhere. So here's an example. Look, this is a stock, okay, hanging out with Diddy. Look how choppy this is. It comes up, comes down, up, down, up, down. Okay, there's not really an edge in here. Now, if you want to trade micro time frames, mind you, these are always on the 10-minute chart. If you want to trade the micro time frame, feel free to make, basically hallucinate. There's a setup here. But when I see something like this, okay, there's no interest in me coming in here, okay? Because I know that the odds are this will just do random moves, okay? And I'm going to get bagged. So I just avoid it, okay? Here's another example of the middle. Look, this stock tried to break the pre-market high. Okay, you see, tried to, wicked out a bunch of people, and then came back down and just did random nonsense for the rest of the day. Okay, this is not like detailed, calculated A+ moves. This is literally random. Okay, the only people that are making money in this type of environment are people that are selling the 0 days to you. Look what happens when it actually breaks. Okay, so you break the pre-market high here. Look at this trend. Okay, this is not random. Okay, this is not random. This is clear, defined trend. This is not, okay, random. Look, we can tell it's going up and to the right compared to, look at the chop here, up, down, up, down, up, down. Okay, there's no Diddy here. Nothing good happens in chop. I preluded to it earlier, but you will literally hallucinate setups that just don't exist. You'll be like, that's a bull flag, and you'll take it and it'll go down, and you'll be like, well, nothing I do works in trading. I should just give up. Okay, you're gonna increase your size, okay, because that pre-market high has to break. It tested that sumbitch, right, like 30 times. It has to break this time. Okay, here's a level, it comes up, hits it, and then boom, back down, and you just lost money. And you rinse and repeat. This is how you destroy your portfolio. Okay, you start to get frustrated. Being frustrating in trading stocks is really not a good idea. Okay, I don't need to go into details why, but it just never ends well. And lastly, there's no clean trend. Remember, we only trade that big clean trend, or we can make tons of cash. See your mindset right here, all that psychology you've been studying, right? take that and throw it out the window if you're going to trade chop. So how will this help you? Okay, it's going to literally prevent you from taking C- setups. Now, in high school, C's get degrees, right? Maybe college, but when you graduate college with a bunch of C's and you apply for a big firm, they're going to tell you to kick rocks, okay? So it's only A+ or GTFO. It narrows your trade criteria. Another question I get all the time is, Ellie, how do you find stocks to trade? Well, I only trade stocks that break these pre-market highs. So if there's 500 stocks in the S&P 500, okay, and 400 of them are in that chop zone, okay, then it narrows down my focus to only 100 stocks, and therefore I can filter my list down quicker and quicker and quicker, and that is how I find the top runner every single day. This is what you really should pay attention to, okay? It will literally increase your win rate just because there's higher quality setups. I'm telling you, if you just play higher quality setups, sure, you may get stopped out and thrown around a couple times, right, while you're still learning, but you'll literally increase your win rate just by following this rule, just because you're taking higher quality setups. It's built into the setup itself. Even if you don't know what a higher quality setup looks like, you'll start to learn because you'll notice these. Rule 3, hold the line when stars align, aka letting your runners go. So you're going to ask, well, Ellie, what is the line? And if you're a longtime follower or listening to my YouTube videos, you've probably heard of purple profits. Have you ever heard of the 80 EMA and the 10-minute chart? So yes, hold the line when the stars align. Okay, but now you may be new to trading. So what is a runner? Okay, it's an extra little piece of the trade you hold on to. Okay, it's like you ever get like an omelet or something from the restaurant? Yeah, a little bit of salt and pepper on there, or you get pizza and you put a little bit of that red pepper on there. Yeah, just a little bit extra piece, nothing crazy. Just a couple of shakes, but nothing crazy. No big size. Okay, no big size, just a small piece. So here's math stuff. Again, remember, I'm not a financial advisor. I went to summer school for algebra, but I know a lot about trading. Okay, so math stuff. So you have two traders. You have trader 1. They buy 3 contracts, okay, 3 contracts at $1, or they put $300 in the trade. I see this all the time on social media, okay? So the trade comes down, hits the pre-market low, okay? So there's your retest, okay? Remember, LE, levels first, then EMAs. So this is your L of the LE model, and then the trade comes down to low a day, and they sell all their contracts for 20%, and they made $60 off that. Okay, I see that a lot, but that's actually not real trading. Okay, that's not going to grow your small account. Okay, if you have a $1,000 account and you're putting a third of your portfolio into this trade, making $60 profits, you're really going to start to beat yourself up. And because what's going to happen? It's going to go lower at some point. So here's trader 2. Okay, trader 2, they buy 3 contracts at $1 with $300. Look, you sell 2 at the low of the day. So over here, this trader sold all of their contracts. Okay, this is what a new trader does. They sell all of their contracts because they're so used to seeing red trades that they don't let trades go. So they sell. So, but me, right? Trader 2, I sell 2 of my contracts right there at low of the day. Okay, that's my first target. Okay, I don't care if my other contract goes to break even. Okay, so I'll move my stop. So we'll do this for stop loss. Okay. Stop loss equals break even on the rest. Okay, so I already locked some gains in, but now if we break that low, okay, so here's that low we're going to break. I'm just going to trail it with the 80 EMA, and I'm just going to keep holding it until price gets it back above the 80 EMA. Now, this trade goes 100%, okay, trader 1 made $60 and I made $140. That is the power of runners. Just by holding one small contract. Most of you can hold one contract fairly easily with literally you won't even be sweating. It's $100. You'll be fine. So let me ask you something. Do you find yourself selling too early? If you do, this is your solution, okay? Please pay close attention. So we can see, here's a stock. It breaks above the pre-market high. This green dotted line is the pre-market high, okay? We formed a little flag here. If you're not comfortable trading till after 10 a.m., that's okay. Remember, on big breakouts, okay, you're going to have multiple entries. So look, you didn't want to enter here. It's too wicky. It scared you. Okay, so what do? You just wait for it. Breaks the pre-market high, comes up, and forms another flag right here. So you just buy the dip down to the 80 EMA. Then you break the high a day. Okay, break the high a day. Remember, we're going to use a 3 contract example. So we're going to sell 2 contracts at the high a day, right? Just to make sure we lock those gains in. We're just locking our gains because remember, we do not know how high a stock can go or how low a stock can go. We have not a single clue. Okay, I don't know. You don't know. The stock doesn't even know. All we can do is follow the momentum. Okay, so now our runner, so 3 minus 2 equals 1. Okay, so this is going to be our runner. We are just going to keep holding this against the ADMA. So look, it does not break the ADMA until right here. Okay, so you made money for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18 10-minute candles, so it's 180 minutes. I can't do the mental math in my head, but I think that's about 2.5 hours. Okay, you just held a trade for 2.5 hours. Most of you can't hold a trade longer than 5 minutes, or longer than you can hold down a girlfriend or a boyfriend. Okay, so make sure you pay attention to this. Okay, you're just going to hold it against the purple line. Okay, and when it breaks the purple line, people are going to ask, well, what is it, a close? Is it a tap? Look, you can clearly see that this candle broke the purple line. Okay, this candle did not break the purple line. This candle did not break the purple line. You can clearly see, look, it broke the purple line and it went down. It's really not that difficult. I think people overanalyze this. It's hold it against it until it breaks. That is it. That is how you hold runners. So let's look at another example on the short side, okay? So look, when stocks break out or break down, there's always multiple areas for entry. So you can hit the pre-market low retest, or if you're me, right, maybe you missed this, right? Because you work a job, you gotta do what you gotta do, right? Sometimes you can't get that exact picture perfect entry that everyone talks about on social media. That is why we have EMAs in our charts. So if you find yourself missing a lot of these entries, this is for you. So we can see it broke the pre-market low. Cool, now we have a trend, but we can't hit this, okay, according to LE model. Okay, so here's our L entry up here, okay, part of the LE model, but here is our EMA entry down here. It comes up, it taps the EMA, the next candle also taps the EMA, and it clearly rejects. So we're going to enter puts here, okay? So we enter puts. We're going to sell that low a day. So remember, we're going to sell those 2 contracts, and we're just going to hold, remember, 3 minus 2 equals 1. So we're just going to have one runner all the way against that EMA until what? It breaks over. Okay, so remember, we sold 2 up here and then we got rid of the rest down here. So look how much extra money you made just by following this. Remember, hold the line when the stars align. Okay, when things are aligning, aka you're breaking previous day lows, pre-market lows, things like that, just hold the line. We do not know how low or how high a stock will go. All we know is our system. Not holding a runner is actually a disservice to your portfolio and should be banned in all 50 states. Okay, you need to hold runners. Okay, my biggest trades are from my runners. I literally have held, no joke, runners for 4 days. Okay, if I bought a contract on Monday, I held it until Thursday, and literally the contract was up like 6,000%. Okay, off of one contract. Okay, I'm not saying that I hold 100 contracts and I got big nuts and look at me. No. Okay, one contract going 6,000% is pretty dang good. Okay, pretty dang good. And I have a lot of traders who come to me, especially with small accounts, and I teach them how to trade runners. Okay, like I know a trader who on Thursday, right, they bought Tesla calls and they held them till Friday overnight, and the contracts went 1,800%. Okay, off of one contract, that is a needle moving move on your portfolio. So that is why it's a disservice not to hold a runner. So how this will help you? Really want to talk about this because I think it'll change a lot about your mindset and also help your psychology. Okay, it's going to build your confidence. Okay, when you hold that runner, it's going to build your confidence, right? Because the first time you do it, you're going to be biting your teeth, staring at the chart for like 3 hours straight, just on that one contract. But the next time you do it, you're going to bite your teeth a little bit less. You're going to be less stressed, less freaking out. Just going to let it work. You're going to say to yourself, kick back, beat up. Hey, I don't know how high this is going to go. I'm just going to follow the purple line. This will help you from stop selling so early, but really need to stress how this will build your confidence over time. Next, if you're struggling to grow a small account, this is the only way you can do it. Okay, scalping 10 to 20% on a small account is a waste of your time. You shouldn't even do it, and it's a waste of the money you have in that small account. You need to find big picture setups where you're going to hold runners and really take that small amount of money and turn it into a lot of money. That is the only way you will grow a small account. Lastly, and the reason why I started following this rule is, look, it takes the emotions out of it. Okay, remember, I don't know how high or how low a stock will go, so there's no guessing. Okay, I'm like, oh, it might bounce off this 500 level that I drew 10 years ago on Webull, so it might bounce there, so I'm going to sell. No, I have not a clue. Not a clue. I can sound really smart and, give you possible targets, right? And scale on the way if it's a daily level, but at the end of the day, no one knows if it's going to break that level or not. The only way you know is if the trend holds, you hold. As always, just follow the purple line. When the stars align, you hold. So now, starting tomorrow, okay, you're going to follow these 3 rules. Okay, actually starting tonight when you review your trades or whenever. Okay, and it's soon, okay? We're not waiting a month to start being profitable. We got to start now, okay? Stop at 3 or broke you'll be, aka the 3 trade rules, okay? Don't allow yourself to overtrade and do all that sort of nonsense, okay? You will certainly not diddle in the middle and hang out with Diddy. That sounds like a bad time. And you will always leave a runner, okay? I'm telling you, so there's 3 rules right here. Make sure you follow them. These rules are one of the main reasons that I became a successful trader, and you can too. As always, check the description down below for any updates and follow me on X, Instagram, etc. Peace.